better place. We are smart at what we do to make our world a better place. By the help of God, to make our world a better place. By the help of God, to make our world a better place. Smart do.
Yes. Hello students. Today I want to take you through a subtopic within determining the net worth of a business, that is the balance sheet. Balance sheet is also a statement that is prepared to actually know the financial position of a business at the end of the trading period. So if you want it by definition, you call it a statement. That shows the financial position of a business at a particular date. A balance sheet, having known the bookkeeping equation, that is assets, capitals, and liabilities, it is going to be affected by the three. So that's why we mentioned the assets is equal to capital added to liabilities. So let's see the components of a balance sheet. Of components. That is what must be available for it to be called a balance sheet. We first have what we call the heading. Heading, which include the name of the business, the statement, that is balance sheet, name of the business, statement, balance sheet, third, it must also contain the date at which it was prepared. Date. That's why it is going to read as at that particular date. We have B or 2, which is assets, capitals, and liabilities. Assets, capital, and liabilities. Here, assets are recorded on one side, capital and liabilities are also recorded on the other side. So, assets one side, capital plus liabilities the other side. Then the total of the two are must be equal. The total of the two sides totals of the two sides must be equal. Why? Because they follow the bookkeeping equation. That is, assets is equal to capital plus liabilities. And when we record assets on one side and capital and liabilities on the other side, definitely they are going to be equal. Let's also see now a sample of a balance sheet. A sample of a balance sheet. So we have the following balances were extracted from the books of Wasco traders. So we have Wasco traders. We're going to have cash 20,000. Okay, Wasco traders are at 30th. Give it a date, 30th, let's say 30th October 2010. So we had the cash, let's say 20,520. Let's say we have bank. This means cash at hand. This means cash in bank. 160,000. 60,000. Let's make it 230. And then let's have premises. Premises, let's give it 800,000. And then let's have debtors. Debtors, let's give them 40,000. Then let's have lastly creditors. How much should we give them? 62,000. We are required to prepare a balance sheet. Oh, maybe I should add a kind of another liability, 2-year loan. 2-year loan. How much should it be? Let it be 40,000. And lastly, let me have stock. Stock of how much? Let me have 2,500. So I'm required to prepare a balance sheet. I've just transferred this one, this other side, and creditors. 62,000. Yeah, transferred for the purposes of using this surface here. So we are required to prepare a balance sheet. The solution is as follows. We have the heading, that is Wasco traders. Then the statement, which is balance sheet. Third, we have the date of preparation as at 30th, 2010. Then I said we are going to have two sides. First side is, this side is debit, this side is credit. And we are going to have, or you can basically omit the debit and credit, but most importantly, have the assets on the left hand side and capital plus liabilities on the left, on the right hand side. So here I have assets. On the other side I have capital plus liabilities. Next step is to go to your information that you are given. Check and mark which one is a capital, which one is capital, which one is falling under liability, which one is falling under asset. Let's start with the cash. Cash is an asset. So you write an A. Bank is an asset, you write an A. Premises is an asset, you write an A. 2-year loan, this is a liability, but it is because it is more than 1 year, it is now a long-term liability. So liability L. Stock. What can stock be? Stock is a good. Oh, it exists. Ah, it is an asset. So stock is an asset. And debtors, these are people who owes my business money. Oh, so when they finally bring in that money, oh, that money is mine. So debtors is an asset. What about creditor? Creditor are the people I owe money. So the people I owe money, those ones, they are liability. I must pay them. So that is it. I've marked which one is an asset, which one is a liability, which one is a liability, and which one is the assets. So remember, we have assets, capital plus liability. It means the capital must be calculated. So how are we going to get the capital? So first, we must remember what we call the bookkeeping equation. Assets is equal to capital plus liability. Assets is equal to capital plus liability. So we are going to make the entries. On the assets, let's fix all that. We are going to have 800,000 premises according to the order of fix, how fixed it is or how current it is. So I have 800,000, that is for the premises. And then I'm going to have the current assets, which is stock, which is 2,500. And then I'm going to have the debtors, which is how much? 40,000. And then I'm going to have bank, which is how much? Bank was 160,230. 160,230. And then lastly, I'm going to have cash, which is 20,000. Cash, which is 20,520. On the other side, I'm going to have capital plus liability, of which I don't have capital. So I'll be able to calculate the value of total assets. I subtract from what I have as the liability, that is 2 yellow. So capital pending. Liabilities, I have 2 yellow, which is how much? Which is actually 40,000. And then I have a current liability, which is a creditor, which is how much? Our creditor was 62,000. So I'm going to add that. What am I getting? 62 plus 40, 102,000. Less whatever I have here to get the capital over there. And therefore, I'm going to have my final figure. Remember, the values on this side must be equal to the values on the other side. So you are going to have a total of this side 1 million. Okay, this plus this, 160, 1 million. What can you get? 1,023 and 250. You have to correctly double line. The other side is also 1,023,450. Double line. So that means what is the value of capital? Add this plus this, get it here. Let's see that in your work. Note that when the assets are more than liabilities, then the balance sheet is said to be solvent. But when liabilities are more than the assets, you call it insolvent. Thank you. Have a nice time.